What if I told you this secret investment strategy is what every American needs in 2024? And I'm talking about the investment optimizer strategy. In this video, we're going to be breaking down the advantages, disadvantages, myth secrets, and real world examples that have made investors millions using this strategy. Rod, let's jump right into it. Talk about some of the key characteristics that exist with the investment optimizer strategy and how it can propel high income earners to the next level.
Absolutely. So we work with a lot of people who are investing in real estate, in a business, notes, all kinds of different things. And inevitably, what they're doing is they're running that money through a savings account.
And savings accounts are awesome, Rod, because they give you so much interest, so many good advantages. No, I'm just kidding. That's a problem in and of itself.
We use the savings account because it's safe and it's liquid, right? We need the money when we're ready to go out and invest. The problem is it's not earning anything for us when it's between deals. It's very inefficient. Okay, so what are we doing? Well, we're replacing that with the investment optimizer strategy, where we use a high cash value life insurance policy where we can create a very consistent, predictable 5+% tax-free return. We have access to the funds. We get the same safety and liquidity as we had with the savings account. It comes with asset protection, creates this additional death benefit. There are just so many additional benefits we get when compared with what people are doing now that it's just a no-brainer.
We're using this policy to invest through to create an additional layer of profitability in my investing, and all the while I'm getting these additional benefits that I'm not paying for. So from that standpoint, it's really powerful. Rod, one of the questions that we often get is, what type of life insurance do you use with the investment optimizer strategy? And we like to use good old-fashioned, solid, predictable whole life insurance because we know exactly what we're going to get in it. Obviously, Index Universal Life has gained a lot of popularity, and we like Index Universal Life for the right strategies. For the investment optimizer, we love the consistent dividends, the predictable guaranteed returns, and of course, all of the other benefits that come with it. So let's talk a little bit, Rod, about some of the advantages that come from using the investment optimizer strategy. And then we'll even get into kind of a case study example where we can show how one of our existing clients, a high income earner, used this strategy to almost double the return that they're getting on investment in conjunction with some really, really powerful tax benefits.
Yeah, absolutely. So the first one is diversification. The fact is that a lot of people we meet up with are out investing in, again, real estate, their business, whatever it might be. They get a little bit too heavy in one area because that's just what they know. That's what they've learned, right? Well, we're teaching people some additional ways to approach this to add a different level of diversification. So that's the first one. Second one is enhanced returns. So the thing I want to be really clear about is we're not saying get this life insurance policy and it becomes your investment. No, you keep doing the same investing as you were already and you would be doing in the future anyway, but we're improving the flow. So you create additional levels of return, additional cash in your pocket later on down the road by flowing the money this way instead of through the regular savings account.
The other thing I think super important, Rod, is that we have continual flexibility to do what we want and flexibility to make good decisions, because sometimes the investment that we want isn't there at the moment that we want it. So the question is, well, where do we hold our cash? Well, we want to hold our cash in a place where we're getting a 5% plus return, where it's safe, it's liquid, instead of feeling like this pressure to go and get it to an investment, even if it's not the right one for me in my situation. So from that standpoint, the flexibility, the liquidity element is really powerful and advantageous.
Absolutely. And then maybe the last one to talk about is risk mitigation. So you talked earlier about, well, we choose whole life insurance for its specific benefits. And the idea is that we go out and we take on enough risk when we're investing in real estate or when we're owning a business or doing these other things. We don't want to also carry unnecessary risk in the opportunity fund. So we're choosing something specifically that is very predictable, very safe, because we're using that money. We need that money there for us when we're ready for it to gain that efficiency without taking on additional risk.
We want to make sure that we're being completely fair and balanced, right? So not only are we going to emphasize the benefits, and obviously if you're a cash flow investor, if you're an alternative asset investor, this becomes basically a no-brainer. once you understand better the mechanics of how it works and how much money it can put in your pocket, especially over the long term. Having said that, there's advantages and disadvantages to everything. The investment optimizer strategy carries with it, I would say, one disadvantage, and there's only one that I can think of, and it's simply that the cost that I pay to have access and utilize this strategy is paid upfront in the policy. So when I first put my contribution into the policy, I'm not going to have access to all of that. It's usually going to be somewhere in the 75 to 80% number. So I'm having to pay a premium initially for the ability to continually get all of those other benefits that we're talking about. Now, when we talk about the return being a 5% plus tax-free return, we're not talking about after the costs have gone out. We're talking about all inclusive. Really, nobody wouldn't use this strategy if they could get past sometimes that cost right up front. But if you can, and when you do, the ability to create millions over time is so much bigger than that small cost that happens up front, that again, for most people, it's still one of those things that's kind of a no-brainer.
Think of like startup costs for a business or fees that you would pay to your broker. You're doing that so that you can get the additional benefits. If you don't pay the admission, you don't get the opportunity for the better benefits. Similar concept here.
Okay, Rod, let's talk about a real-world example so that people can understand how the investment optimizer strategy can work in their world and kind of some of the impact that it can have on their investing.
Yeah, so there's a specific type of investment that we are familiar with. A lot of our clients use. It's an ATM fund investment. So yes, quite literally, you are participating in a tranche where you're going out and buying ATMs. And then when people are using that ATM and they're paying those fees, you're benefiting from that. You're getting some of those fees. You make money off of this. But really cool cash flow strategy. And when you look at the pro forma, what it says is you put in $104,000 in this example. It starts kicking off $2,000 a month of income. When you measure that IRR over time, just straight from that income, 7 years of cash flow with a 16.5% IRR.
Yeah, that's a great return. And again, can I just tell you, one of the really major benefits of being in the alternative asset space is that you can go out and get those types of returns, even in the underlying investment.
So, but what if I told you that by investing in that exact same place, earning that 16.5% return, you actually end up getting a better return if you flow your money through the investment optimizer. In other words, the benefits, the additional growth that you're experiencing turns that 16.5% return into 20.8%. Same flow, same investment,
Crazy.
no changes other than the fact that you're flowing it through the investment optimizer strategy.
That really is incredible because again, like you said it, but I'm just going to re-emphasize it. Nothing has changed other than where I pool my money. Instead of using the savings or checking account, I use the policy. I'm getting an extra return on the money. And now that's basically being put forward into the investment because of the concoction of all of those pieces coming together.
And as an additional tax benefit, because like we talked about earlier, all of the growth that we're getting inside of the policy is tax-free growth. That isn't encapsulated in the return even. There's an additional layer of benefit that you have more cash in your pocket that later on the road because of those tax benefits.
Okay, but share with us, Rod, what happens when we bring the tax benefits into it? Because I think while the investment optimizer strategy in and of itself is powerful, it's far more powerful, far more impactful when we bring it in line with all of our 6 core benefits, right? When we start to use leverage, velocity, and so forth, suddenly we can do things that, like really take it to the next level.
With this particular investment, there's an additional tax efficiency that you can get with it. And when you include that, when I go back to the 16.5, in the pro forma, the 16.5 turns into 30, okay, with that additional tax benefit. Well, what if you take the tax benefit and you're running it through the investment optimizer strategy? What that does is it takes it to a 37% IRR.
That's insane. So now we've jumped all the way from 16% to 37% internal rate of return without including any additional risk, right? And basically doing everything the same other than running it through the investment optimizer. That's really powerful. Click on the button below and let us know what you think about the investment optimizer strategy.